how would you describe the health of the crypto market as we are kind of moving into Q3 of 2025?
We're seeing a lot of different trends actually from the past that actually have now materialized in 2025. A lot of the Defi really start to take off. We're starting to see crypto rails be used in terms of being the bedrock of a future financial system.
Is there anything that retail audience and investors should be paying attention to over the next 90 days?
I'm very much looking at whether the big global players, either on the enterprise side or the big financial institutions, are actually moving money on the blockchain. But I'm actually quite hopeful that in Q3 and Q4, we'll see some real product launches and some real movement of money on the blockchain.
Hello and welcome back to the Binance Studios. Now joining us today, we have Jonathan, the CEO of Chainalysis, which is a leading voice in blockchain analytics. We're going to be unpacking the state of crypto through the lens of blockchain data, regulation and policy. There is so much to discuss, and we'll be diving into mostly the White House latest digital asset reports to get some key on-chain signals. And this conversation will also explore what the data tells us about the market health, investor behavior, and also where regulations are headed globally. So loads to unpack. Without further ado, Jonathan, thank you so much for joining today. Really appreciate you taking the time out of a busy schedule to talk us through what is going on in crypto. First of all, how are you doing?
Doing great. I'm actually calling you from Washington, D.C., so there's lots happening on Capitol Hill and exciting time for the industry in general.
I can imagine, and a very exciting location for you to be joining us from as well. So really appreciate it. Let's kick things off then based on kind of everything that's been going on in 2025. What a year. We are just over halfway through. The big picture from the Chainalysis data lens, how would you describe the health of the crypto market as we are kind of moving into Q3 of 2025?
We're seeing a lot of different trends actually from the past that actually have now materialized in 2025. I think that a lot of the infrastructure around crypto is maturing. We've seen a lot of the DeFi trends that we have seen for a number of years really start to take off, and places like hyperliquid, generating large sums of revenue. And obviously there's been a lot of innovation on how on-chain infrastructure can power the future of financial services, and actually seeing the adoption of that across the world is, a big trend that we have seen so far this year. We're also seeing stablecoins really take hold in both a payments context as well as also providing the rails for more decentralized finance. And, really exciting to see the total outstanding number of stablecoins go up and seeing the transaction volumes across the world really rise across a range of different use cases. And so, it's a really sort of exciting time where cryptocurrency markets are not the only focus, and we're starting to see crypto rails be used in terms of being the bedrock of a future financial system.
And it's really interesting that you say that, because I think if we revert back to 2017 or 2021, kind of high peak market euphoria, and we asked, what are you guys most excited about? And I think if people had referenced stable coins, people would have raised an eyebrow. But as you mentioned, it's a huge metric for evaluating the market today, especially for investors that are trying to make sense of just how far along we are in digital asset adoption. So kind of with that in mind, I think stablecoins can also be part of the answer too. But from your perspective, with the metrics and data that you have available at Chainalysis, what kind of metrics are you able to look at that really you believe matter the most when you are evaluating the market today?
Well, I think that when people look at the on-chain volumes, they can see that stablecoins are approximately 70% of all on-chain transactions, and that's a massive shift from the 2017 that you reference, where stablecoins was a much smaller portion and really only used to settle between exchanges. And so I think that the big question on people's minds and the way that people use Chainalysis data today is to answer the question of, well, what is that use case and how are stablecoins actually being used for broader purposes outside of crypto trading? And that's something that we track very closely at Chainalysis, and our customers are very interested in to understand, what does the future of this hold for the future of payments, the future of cryptocurrency markets, and how is it going to be adopted by institutional players?
And as you are joining us from Washington, D.C., I have to ask you now, we are kind of talking at the moment about the White House recently releasing its digital asset report and unpacking some of the findings there. And I did have a look on the Chainalysis website, and you do have a very comprehensive report, which is summarizing some of the recent findings. So can I ask you, what has stood out for you most from a kind of a policy and infrastructure, and then I guess also a digital asset perspective?
Yeah, I think that when you look at what the White House has done, and really, I think that you have to look at the White House, Capitol Hill, and then the regulatory environment. I think we need all of those things to work together in order for there to be a step function change in the industry. And what the White House laying out such a comprehensive set of findings is saying that, this is the future of the industry inside the United States, and the legislative win that the Genius Act represents is to say that this is the course that the US is on for the foreseeable future, and it provides the opportunity for real enterprises to invest against that thesis. And now I think that by the White House laying out these policies, it sets a very clear guiding principle for the regulators to actually come in and get to the details of exactly how businesses will be required to operate for the stablecoin market in particular. But as we go forward into more of the market structure bill with clarity and sort of what the eventual bill being passed may look like, we will see that actually the regulators will take a leaf out of the White House and think about how to actually implement that vision in specific regulations around what are the requirements on stablecoin issuers, what are the requirements on custodians, what are the requirements on venues and DeFi. And so that's really the next phase, and it's still important to keep up the engagement and education in Washington during this time.
And it's interesting that you say that and you reference kind of stablecoins as being a really bullish metric that you have noticed already as we are in Q3 of 2025. We also saw that the report references stablecoins as one of the most promising technologies in crypto, which sounds like there's a lot of room for upward potential of adoption there. So I'm curious to hear from you, what should people that are using the industry, stablecoins, digital assets, and people that are building in the space, how much upward potential do you see this industry having? As someone that is also on the ground and having these conversations, what's the outlook?
Yeah, I think that when you think about the penetration of stablecoins in the global payments market, we are seeing the technology being validated to do the level of volumes that would be required if stablecoins were to get into cross-border payments, remittances in a meaningful way. And what I mean by this is that you're seeing the technology is capable of moving trillions of dollars of value securely and safely between crypto players today. But those flows could just as easily be tied to remittances or cross-border payments or import-export. And we're starting to see that happen in some of the corridors where payments is a little bit harder. And so I think that what people should be looking at is, what is the total amount of stablecoins in existence? And at the moment, that's just north of $250 billion worth of outstanding value. With clear regulatory guidance, with US players being able to issue stablecoins, you could see that rise over $1 trillion in outstanding. Some people say it could rise to over $2 trillion in outstanding. That is one metric that everyone should be tracking fairly closely. And the second is, what does the on-chain volume and circulation of that look like? How frequently are those dollars actually moving around and changing value? Or how much is it actually just an inflation hedge in certain parts of the developing world? And so those different use cases will have different effects on the market. But overall, the total outstanding value of stablecoins and the velocity of them circulating are the things that I pay a lot of attention to.
And I guess the million-dollar question now is when it comes to timeframes for this. We mentioned the report could be a great guidance metric for regulatory bodies, not just in the United States, but globally on a global level. So when it comes to the implementations and the positive outcome and adoption from reports like this, is this something that we can expect to see immediate action in the next 3 to 6 months? At what point do you think we might see the tipping point, as it were?
Yeah, I think that the problem with this is that businesses are starting to invest against the regulatory clarity. So this is something that, again, takes time, is that we have two processes going on at the moment to get to true institutional adoption. We need regulatory clarity down to the specific guidance from regulatory bodies. I expect that actually ends up taking another 6 to 9 months to actually fully flesh out in many countries around the world and also in the United States. There is really, I've been traveling the world a lot recently, and there really is a wave of optimism and urgency in regulators around the world off the back of actions in the United States. And so we'll start to see that happen across the world in places like Korea, Japan, Singapore, the UK, the UAE, and other countries to put in place real guidance and principles for the adoption of stablecoins and also potentially also market structure. So that will take 6 to 9 months, but that doesn't stop businesses investing against that thesis. And so again, sort of the larger institutions, they take more time. They care a lot about operational risk. They care a lot about getting the products right for their customers. And that's where, us at Chainalysis, we're seeing a lot more interest in how do you operate in this different environment? How do you assess risk in this different environment? But you will see products launched before the end of the year from some of those institutional players. You'll see that probably takes hold mostly in the first half of next year as rules become clearer.
So I think you've got a kind of a great overview, being able to be on the ground and having a lot of very interesting meetings and conversations globally, but then also with the reference of on-chain metrics and data. Is there anything that's surprising you at the moment from what you're finding as we're in August 2025 that is maybe kind of standing out as an indicator of where we are in the market cycle?
I think that the interesting things that we are seeing is that the balance between centralized businesses and decentralized applications is actually something that is interesting to me at the moment, is that we are seeing that self-hosted wallets and the ability for people to own their own crypto and be able to operate and use different services has become a lot easier, and a lot more people are getting comfortable with these technologies. And I think that that's a really positive thing for the future of the industry. And I think that the adoption of that over the cycle will be very important for the technology becoming this critical piece of infrastructure. And so it's really encouraging to see that it's not just in centralized venues, and the adoption of chains like Binance Smart Chain and other blockchains is really encouraging that people are engaging with the technology more directly, and it's powering more and more use cases. And so I would say that that's maybe one of the surprising things. I would say, not to be a negative Nancy, but there is actually also a huge amount of uptick in scams. And us at Chainalysis, we have actually put in place a new business line to prevent scams from happening. And so we have actually helped protect assets at major exchanges through proactively feeding exchanges data about scams in real time. And so that's something that we've launched this year, and I actually expect us, unfortunately, to be, saving a lot of people money from these scams. And I think that that's another trend that is important for people to pay attention to.
Yeah, absolutely. 100% agree with you there. So as we are kind of directing now the conversation over into retail and to the retail audience that are watching the conversation, what are some of the on-chain metrics or data points that you can reference that can indicate, first of all, I guess, if the markets are heating up, but also if they are starting to cool down? What would you say are some of the key indicators to keep an eye out for?
I think some of the things that I look at are there are now pretty good reports being written by places like Tether that look at like the fundamental economics of the Tether ecosystem. And I think if you follow Philip Gradwell as a good example of this, he's their chief economist. He's putting out a lot of really interesting metrics about the usage of Tether in their ecosystem. And really also, his focus is on transaction fees. And I think that transaction fees are an important variable in considering how much economic value is actually moving on these rails. And I think that it's important for retail and institutional investors to think about how much is being generated in economic value from the transactions behind them. And so I think that that's an important metric that I particularly like to track. I think that there's also transaction volume on these different blockchains themselves, unique wallets being created. You need to be careful with some of those metrics because they are easy to influence in some cases. And so that's why a balance of looking at transaction fees and on-chain volume is actually like a very good way to understand the fundamental economics of these networks.
That's a great tip. Thank you for that one. And now when we look at the next 90 days, so you've mentioned some of the kind of discussions that we have seen from the White House Digital Asset Report should start to come into fruition in the next kind of 6 to 9 months, for example. We are in a fairly positive market when it comes to both price, sentiment. A few of the indicators like fear and greed, for example, does show that we do have new audiences viewing the market. Is there anything that, in your opinion, retail audience and investors should be paying attention to over the next 90 days? And if so, what would that be?
I think that when I look at the market and seeing sort of indicators, I look at what is the institutional adoption for crypto assets and paying a decent amount of attention to inflows and outflows from ETFs, for example, as a good barometer of the interest level from more institutional players. I think that it's important to be tracking that. And we obviously see sort of new trends on companies being set up to build treasury positions in different digital assets. And we're seeing that have, an influence on price as well. And so I think that, looking at those types of indicators is an important piece of it. From my perspective, and this applies not only in the next 90 days, but it applies more broadly into the future. I'm very much looking at whether the big global players, either on the enterprise side or the big financial institutions, are actually moving money on the blockchain. And that's really the phase in this growth cycle that I think changes the industry in general. And so I think looking out for those stories and understanding those trends is something that is going to be important for all market participants in this next cycle.
Yes, for sure. Well, as soon as you get wind of any of those kind of updates when it comes to large organizations or entities building on the blockchain, come back on the channel, tell us all about it, and we'll dive into it. Final question, Jonathan. So we are hopefully going to be lucky enough to have you join us for Binance Blockchain Week in December. There's no crystal ball here, but we'll just imagine looking ahead into the future because 5 or 6 months in crypto feels like a very long time indeed. But what kind of trends are you anticipating for there to be discussion points at that moment in time? And what kind of things do you think will be worth discussing based on where we are in the market cycle?
I think that it's going to be an exciting time in December to look at who is actually managing to launch products this year. And I think that you'll see sort of some of the major financial institutions and major enterprises want to get some of their products out before the end of the year. And so hopefully we're in a position where we are discussing the amount of money that global financial institutions and global enterprises are actually moving on the blockchain. And I think that that'll be a great topic of discussion for Binance Blockchain Week in December.
Was the amounts, were they positively surprising for you? Are you able to discuss a little more on kind of...
I think that we're still in sort of an experimental phase of that, but I'm actually quite hopeful that in Q3 and Q4 we'll see some real product launches and some real movement of money on the blockchain.
Fantastic. Well, Jonathan, thank you so much. If there is any updates, you are always most welcome to come back onto the channel to share them with us. And thank you so much for your time today. Most appreciated. So thank you.
Thanks, Jessica.
Thank you. Well, that's all for myself and Jonathan. We hope you found this interview interesting. If you did, share it with someone else who is in the space. Don't forget to subscribe to the channel if you haven't already, and we'll see you in the next one.